Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after Tuesday's RBA rate shock announcement, the Australian dollar has managed to sustain above the 71.45 support. After taking the challenge back to that top side where 72, 60, 65, 60-day moving averages, the market is still holding up. However, I'm keeping an eye on this RSI as it is a little bit weak but hasn't confirmed any negative bias as of yet. In light of the pattern, I still feel there is further upside potential, and that is towards the region once clearing 72, 60, 65 up to 73.35 to around 73.90 and reassess from there. On Tuesday, the Reserve Bank of Australia, or the RBA, surprised the markets after announcing its biggest single rise in the cash rate in 22 years, following its larger than expected hike of 50 basis points or half a percentage point, taking the cash rate target to 0.85. In the monthly statement from Governor Lowy, he said he believed the Australian economy was strong enough to withstand higher interest rates after nearly 18 months of emergency monetary sit-ins. He acknowledged the need to rein in surging inflation as the key reason for the rate rise. The euro managed to recover, and from the recovery, still looks like we could see a potential mix play into today. That is because the market still holds underneath the midway point. But I like the way this candle's formed, and this is why I said a potential recovery, and therefore could see rise up towards 107.20, with 107.85 still holding as a top or a cap in the short term. With that being said, though, if the market doesn't manage to break through the midway point, then we could see another downturn back towards the key support of 106.25.30. While the dollar index, which measures the greenback strength against a basket of 6 major currencies, was slightly firmer overnight and trades around 102.40. Looking at the dollar yen pattern, the market still holds relatively firm, still holding a neutral bias. I feel the market has potential, maybe even challenging and top side around 133. But I feel that due to the extreme overbought conditions, but the ADX is holding to a bullish trend, still puts me in a neutral position in terms of trying to assess where we can pull back to, or even if we can climb slightly higher. So it's safer to sit on the sidelines in the short term. Sterling, a very strong rebound off that level that I was looking at around 124.15.35 area, and from the strength has managed to just clear the trend line. Keep an eye on this pattern, because if the pattern continues as it is, then we are looking up towards a potential target of 126.05.45 to 127.20.25. But with the RSI breaking through the midway point, still keeps the upside in clear focus towards those targets. Since the rebound of 191, sterling Kiwi is still maintaining its upward trek and looking now towards the region of 194.65 to 195 and reassess from there. Once again, gold finds demand in front of that level, which was seen around anywhere 1,825 to 27 to 1,838. In light of the pattern, the market still holds to a mixed play, and therefore I feel that we're right in the middle of the range, so we can still see swings of either side and still give little direction in terms of the trend in the short term as we continue to coast sideways, but still toppy around that 70-80 level. They're still likely to see a bottom around 25 to 27. And finishing up with oil, since the hanging man around that 118.45 to 90 area, the market is still holding underneath there. And with a bit of divergence, let's see if we can eventually get a break of 115.40. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and also the end of the day wrap.